Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And we're starting with EURUSD as usual. Let's discuss the trading plan with Miroslav Bavulski.
Eurozone inflation data matched economists' forecast exactly today, leaving the euro largely unchanged as markets had already priced in persistent price pressures across the region. The market focus now shifts to the release of the FOMC meeting minutes, along with remarks from FOMC member Michel Aspar. Given the Fed's hawkish tone and the ongoing divide around future rate decisions, the US dollar may continue strengthening against the euro. If EURUSD moves lower, the key downside level to watch is 1.1578. Only a false breakout there would provide a valid long entry, targeting a recovery to 1607. The resistance formed during the first half of the day. A breakout above this range, followed by a successful retest from the top down, would confirm bullish momentum and open the way towards 1635. The final upside target stands at 1659, where profit taking is likely. If EURUSD declines further and buyers fail to defend 1578, pressure on the euro will intensify, increasing the chances of a drop toward 1549 and reinforcing the broader bearish trend. Only a false breakout at that level would justify fresh long positions. Otherwise, rebound buys are planned from 1527, targeting a 30-35 pip intraday correction. If EURUSD attempts a modest rebound after the lost batch of economic data, bears will likely step in aggressively, around 1.1607. A false breakout there would provide a solid short entry setup, targeting a decline toward 1578. A clean break and consolidation below that level would strengthen bearish momentum and open the door for a deeper move toward 1549, where stronger buying activity is expected to emerge. The final downside target stands at 1527, where profit taking on shorts is likely. On the upside, if EURUSD continues higher and bears fail to defend 1607, where the moving averages are still favoring sellers, buyers could regain control and push the pair into a larger recovery phase. This scenario would expose the next resistance at 1.1635. Only look for fresh shorts there after failed breakout attempt. As for aggressive fade trades, short positions on a direct rebound from 1659 remain in play, targeting a 30-35 pip intraday pullback.
Let's trade with the MACD indicator. It's time for GBPUSD. Jakub Novak presents.
Today you could plan to buy the pound when the entry point is reached around 33.95. Targeting growth toward 34.22. At 34.22, you could exit long positions and open shorts in the opposite direction, expecting a 30-35 pip reversal. Growth in the pound today is only possible after weak US data. Before buying, make sure that the MACD is above the zero mark and just beginning to rise from it. You could also plan to buy the pound today if there are two consecutive price tests of 33.77, while the MACD is in an oversold territory. This would limit downward potential and trigger a reversal upward, a move toward 33.95 and 34.22 can be expected. You could plan to sell the pound today after a break below 33.77, which should lead to a quick decline. The key target for sellers is 1.3351, where you should exit shorts and immediately open longs in the opposite direction, expecting a 20-25-point reversal. Selling pressure will return with strong US data. Before selling, make sure that the MACD is below the zero mark and just beginning to decline from it. You could also plan to sell the pound today if there are two consecutive price tests of 33.95, while the MACD indicator is in overbought territory. This will limit upward potential and trigger a reversal downward. A decline toward 1.3377 and 33.51 can be expected.
That's all for today. See you online soon.